Good morning to both of you. I think the question on everybody's mind, is this a bear market rally or is this a bull market rally? Which is it, Mona? What's happening here?
Yeah, thanks, Andrew. Look, I think the bulls found some reasons to be optimistic this week. And of course, first and foremost among those is earnings season. I think earnings is reinforcing that the consumer still remains resilient. We're seeing that not only in bank earnings, but stories like Netflix, like United Airlines, showing pretty robust consumer demand story. But we think in order for this rally to be kind of sustainable, believable, we'd still have to see a couple things fall into place. And of course, first and foremost among them is the inflation story. Now, the good news there, a silver lining there, is perhaps we are seeing some underlying trends of cooling inflation that showed up this week as well. You know, yesterday we got some housing index data that showed pretty weak sentiment and numbers across the board. Keep in mind, mortgage rates are now above 7% here in the U.S. We're also seeing commodities once again start to roll over despite the OPEC plus news. So if we continue to see a relatively healthy consumer with a backdrop of continuing cooling in inflation, that's, I think, when we can start to mount a more sustainable rally. Of course, ultimately, that would have to mean a Fed pause as well. But we may not be there yet, but we're heading in that direction.
Jim, bull market rally, bear market rally, what's going on?
I wish I knew, but I think we're close to a bull market rally if it's not one. I guess, Andrew, I think inflation is coming down, and as the months go on here, rest of the year, we're going to get better and better reports on that. You know, I recently looked back at tightening cycles back to the 1980s, and what you find out is that when the stock market bottoms is not when the Fed stops raising rates, it's when the 10-year yield stops going up. And so I think that's what we got to watch for to blink. And I think what's happening here is the primary concern's been inflation. And when there's concern about inflation, bond yields have upward pressure.
Right.
There's no buyers, a lot of sellers. But rapidly what's happening is the Fed continues to raise interest rates as we're raising recession fears. And pretty soon, I think recession fear is going to overcome inflation fear. And when that happens, you're going to have more bond buyers than bond sellers, and the bond market's going to quit going up with Fed hikes. And I think we're getting close to that. That might be what this stock market's already picking up. You know, the thing you got to remember about bear markets is they don't end when the news is good. They generally end when the news is totally hopeless. And
but Jim, does this base case of yours rely on, as Mona said, a meaningful pause ahead of what the current expectation is by the Fed?
Well, absolutely. But if the bond market bond yields stop rising, then the Fed's going to follow. If you look back historically, the bond market always leads the Fed. And I think the Fed might continue to raise rates, but the stock market might be going up long before they quit their tightening campaign. I think if you wait for the Fed, you're going to miss. I
want to get Mona back.
Shepard Smith here. Thanks for watching CNBC on YouTube.